Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I trust you're having a fabulous day. Well, markets are a little bit quiet, and I think we shouldn't be taking that for granted. I think actually the equity market could be at breaking point, one way or the other. Of course, fueling the upside is the idea that, the market always goes up and we'll get past this economic downturn and we're smarter than Main Street, we ivory tower Wall Street types, so we're just going to buy even though the economy looks to be in serious trouble. I did see one bright spot though for the US economy. It looked like the housing industry could be bottoming out a little bit, maybe having a little bit of an uptick, which would be great because they were first in a recession. They've been in recession for a very long time in that industry in the US. So maybe it's going to be a sort of sector by sector rolling recession sub-trend economic growth experience. As we know, manufacturing is deep diving into recession right at this very time, and also retail sales, despite their monthly 0.3%, was still down over the previous 3 and 4 months. And also we have probably commercial property beginning to collapse in the US, and we have, of course, the banking crisis continuing to simmer in the background. It's like, one of those dishes at home. It's on a long, slow simmer, and you're off doing other things around the house, but it's still simmering away, and you have to be careful or it might catch fire and flare up. That's the US banking crisis. Okay, so still a Main Street economic dire outlook, still massive amounts of money to investors, these big fund managers who get paid for just buying stocks and bonds. It's not that hard, it's not rocket science. Get paid enormous sums of money, and by law, people have to give them their money. So they're doing very well. In fact, almost certainly, passive fund investment has outperformed active trading for the last 3 to 6 months, as the markets have been very volatile on the short to medium term time front and have pretty much gone sideways slightly higher on a long-term basis. Overall, though, still well off their highs of a year or two ago, the US stock market. And I think we are now, as I said, at some kind of breaking point, or shall we call it a tipping point? Obviously, my internal bias is stuck out with my reference to a breaking point. So this is the battle. The battle is, will the terrible Main Street economics of the United States finally wear out the mistakenly euphoric bullish sentiment, which, remember, was previously based on the idea that the Fed would be cutting interest rates by 100, 200 points by now, which was just always very, very funny. And instead, the Fed is hiking rates, and instead, core inflation is 5.3%, might even be re-accelerating, so there's no room for Fed cutting, and the economy in the US is in trouble. So stocks, usually, stocks go down when an economy is in trouble. But in Germany at the moment, as I've previously pointed out in a previous video, they're already in a recession, already have 2 negative quarters, probably going for 3 and 4. And their stock market has just hit all-time new record highs. So there you go. The world has changed. The world is dysfunctional. I guess that's not telling you anything you didn't already know. So we have to learn to trade and behave in different ways. So I'm open to the idea that tremendous government spending is finding its way into corporations, it's finding its way into wealthy individuals and companies, and it's going to be expressed in higher stock prices because the money simply has to be put somewhere. And also the concentration of those few major funds, 3 to 5 major funds, global funds that really hold an extremely large proportion of the global capital that's available for investing. So if you know what they're thinking on any particular day, that could be a help. We also, of course, have had the advent of those one-day options, which reached a crescendo of 40% of the daily turnover of the S&P 500 index, which is extraordinary to say the least, and is big-time gambling, which has to be hedged into the market back and forth, hence volatility. So all of this is coming into play, but I think all of these forces have pretty much now shown their cards. It's a bit like a poker game. Everyone's finally put all their cards on the table. Who's won? That's where I think we are in the stock market. Is it the excess liquidity and blind optimism of some of the funds management industry? Is that going to triumph? Or will it be the reality that the global economy continues to slow, largely led by the European and US economies, that is the Western economies, driving the global economy toward recession? I think that is really the state of affairs at the moment, the economic state of affairs. Will it finally transcribe into equity valuations? Remains to be seen, but over the last few days, the market has put in that tiring price action that I've been warning of for some time. Market looks tired. People are buying now in Asia after selling initially. And I think the market wants to rally tonight in New York. And if the market cannot rally tonight in New York, it could be game over and the fundamentals win. Have a great day. Clifford Bennett, Chief Economist, ACY Securities.